If you're a business owner about to click submit on your 2025 tax return, I need you to stop right now because you are likely about to tip the IRS thousands of dollars that you legally do not owe them. And you're doing it simply because you are rushing to meet a March or April deadline that doesn't really matter. See, most people do not realize that filing early is often the most expensive mistake an entrepreneur can make. You lose money when you rush, and you save money when you strategize. I'm Henok Kebede. I'm a licensed certified public accountant, and I'm the founder of HK Financial Advisory. We specialize in helping profitable business owners move past basic tax compliance into advanced tax mastery. We use the exact same IRS tax code that everyone else uses, but we use it to help our private clients legally avoid massive tax bills every single year. Today, I'm going to reveal 5 massive tax saving moves you can still make for your 2025 tax bill. Even though the year is technically over, these doors are still wide open. Whether you run an S-Corp, a growing LLC, or you're a highly paid freelancer, these post-year strategies are the difference between a painful tax bill and keeping that cash to reinvest in your business. I'm also going to share a bonus strategy at the end that most accountants flat out ignore. So do not close this video and do not file your return until you've checked these off your list. First, we need to talk about the massive shift that just happened with the research and development costs. Thanks to the recently passed One Big Beautiful Bill Act, the rules for R&D just changed completely in your favor. And the best part is, the fix is retroactive. See, for the last few years, business owners were forced to stretch their domestic R&D deductions over 5 long years. It absolutely crushed cash flow for growing companies. But under the new Section 174-A rules, for your 2025 tax return, you can now fully expense those domestic R&D costs in a single year. Let me give you a real-world example of how powerful this is. See, we recently sat down with a software development client who spent $200,000 on domestic developers last year. Under the old rules, their previous CPA told them they could only deduct $40,000 this year. When we took over, we applied the new immediate expensing rules. They were able to deduct the full $200,000 right now. Now, you might be thinking this only applies for massive tech giants, but this strategy qualifies for almost any business owners developing new product, software, or manufacturing process right here in the US. Here's where people mess this up. If you file your return right now without calculating this retroactive catch-up or making the proper election, you are leaving a massive immediate deduction on the table. You have until the filing deadline, including extensions, to claim this, so do not rush. The second strategy is what I like to call the SEP IRA Time Machine. There is a massive myth out there that all your retirement contributions must be completed by December 31st to count for the tax year. If we were talking about SEP IRA, that is 100% false. You can actually contribute to a SEP IRA for the 2025 tax year all the way up to your filing deadline. And yes, that includes extensions. So let's say you run an LLC or an S-Corp and we file an extension for you to September or October. That means you have all the way until the fall of 2026 to find the cash. You can drop tens of thousands of dollars into a tax-deferred account and retroactively lower your 2025 tax bill. This is a strategy we implement for our clients all the time. It is perfect for business owners and freelancers who had a high profitable year but are currently low on liquid cash. See, the biggest mistake to avoid here is thinking you need to have the cash today in March or April. By extending your tax return, you give your business 6 more months of cash flow runway. You use that time to fund your own tax deduction instead of paying the IRS. The deadline is tied to your filing deadline. So if you extend the return, your deadline to pay yourself extends with it. Strategy number 3 revolves around the permanent revival of the 100% bonus depreciation. If you bought equipment or vehicles for your business last year, listen closely. Recent legislation permanently reinstated 100% bonus depreciation for qualified assets placed in service. Most standard tax software and generic CPAs are still defaulting to older, phased down depreciation schedules from 2024. They might be telling you that you can only write off a fraction of that asset. That is outdated information. Whether you bought a heavy duty truck for your contracting business or high end camera gear for your production agency, because we stay on top of the advanced tax strategies, we step in and use the restored 100% bonus depreciation rules. We wipe the entire purchase amount of your taxable income in one single shot. This qualifies for any business owner who made significant capital investments in 2025. The fatal mistake to avoid is using standard depreciation just because your CPA hasn't caught up to the new tax laws. You must ensure these assets were placed in service by December 31st of 2025, but you claim the massive deduction on the return you are preparing right now. The fourth strategy is an absolute game changer if you live in a high tax state. It is called the pass-through entity election, or the PTE election. You might have heard the news that the recent tax legislation finally raised the personal limit on state and local tax deductions from $10,000 up to $40,000. But here's the trap, the IRS buried in the fine print. If your income exceeds $500,000, that new $40,000 cap aggressively phases out. See, for many successful business owners, your deduction drops right back down to the old $10,000 limit. And even if you get to keep the $40,000 cap, if your state tax bill is like $100,000, you are still leaving $60,000 on the table. But the PTE election allows your business to pay your state taxes on your behalf. See, this brilliantly turns a limited personal deduction into a 100% unlimited business expense at the federal level. Here's what that looks like in the real world. Let's say your business had a highly profitable year and you owe $100,000 in your state income tax, like California or New York. Without this election, the high income phase out rules might limit you to just a $10,000 federal deduction. That leaves $90,000, providing absolutely no tax benefit. With the PTE election that we help clients set up, your business pays that $100,000 directly, and the full $100,000 becomes a business deduction that lowers your federal tax bill. This is available for S-Corp and partnership owners in participating states. But here's the critical warning. Do not miss the election deadline. Some states require this election to be made or a payment to be submitted by the original due date of March 15 for pass-through entities. If you miss that window, the strategy is gone for the entire year. Strategy number 5 is the most misunderstood tool in the entire tax code. It is the strategic extension. See, filing an extension is not a bad thing. There are persistent myths that filing an extension increases your risk for an IRS audit. That is entirely false. In fact, rushing a return leads to careless errors. And careless errors are exactly what trigger audits. See, by strategically extending your return to the fall, we buy time. We use that time to perfect your strategy, track down missing write-offs, or perform deep dives into your real estate investments. For example, we had a client who was facing a massive tax bill in April. We told them to stop, and we filed an extension. Over the summer, we were able to retroactively identify deductions they completely missed in the chaos of running their business. If they had rushed to file in April, they would have paid tens of thousands in unnecessary taxes. This strategy applies to virtually every business owner, but you have to avoid one massive trap. See, an extension is an extension to file your paperwork, not an extension to pay what you owe. You still need to calculate a safe harbor estimate payment by April 15 to avoid interest and penalties. But the time you buy allows you to protect your strategy and claim every legal deduction. Now, because you stayed this long, I want to give you one bonus strategy. It feels like insider knowledge, but it is entirely legal. It is the retroactive Augusta rule optimization. You probably know you can rent your personal home to your business for up to 14 days completely tax-free. But most business owners do it wrong and leave themselves exposed. If you held legitimate board of advisor meetings, content shoots, or strategic planning retreats at your home in 2025, you can still document those meetings before you file your return. You need to draft the corporate minutes, establish a fair market rental rate using actual comps, and ensure the proper work is in place. You can't go back in time and invent meetings that didn't happen. But if they did happen, you have until you file to make sure the documentation is bulletproof. We help clients do this correctly so they can pull thousands of dollars out of their business completely tax-free without fearing an auditor. So here's the bottom line. The IRS wants you to rush. They want you to take the standard deductions, pay the highest rate, and move on. But at HK Financial Advisory, we do not do standard. See, tax planning does not end just because the calendar flipped to a new year. If you're a business owner or an entrepreneur staring at a 2025 tax bill that makes you sick, do not press submit. Before you go, if this video just saved you thousands of dollars, please hit the subscribe button right now so you never miss another tax strategy. And share this video with another business owner who is about to make a massive mistake of filing early. Then click the link on the description below to book your one-on-one strategy session with my team. We will look at your numbers, map out these advanced strategies, and see exactly how much of your tax bill we can legally eliminate before you lock it in forever. The deadline is closer than you think, but the savings are larger than you can imagine. Hit subscribe, share this video, and book your call now. I will see you on the other side.